I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and this is Trading Places Live. It is Monday, October 19th, 2020, and I'm pre-recording this Trading Places Live for Tuesday, October 20th. Futures are currently higher in after hours. It was a rough Monday, but it does look like maybe we'll get things off to a little bit better start on Tuesday. What we're going to get into the agenda here in just a minute. Actually, let me just walk you through that. We're going to take a look at the daily market recap. So we'll go through that Monday action with you. Then jump into talking technically. We'll talk a little bit about the options world because the market is struggling right now. And I think part of it could be that the options market has been so bullish, but we'll go over that chart in just a little bit. Then I'm going to go through short squeeze. There's a number of short squeeze candidates that we're watching at Earnings Beats. I think you might enjoy that segment. And then we'll take a look at chart list in particular. I want to go into our strong future earnings chart list, take a look at some of the stocks that had a rough Monday that could be setting up for us. Then we'll get into earnings spotlight, number of companies reporting after the bell, and wrap up the show with the 3 you must see. But before we get into any of that, I do want to point you over to earningsbeats.com. I'd love to have you come in, sign up for our free Earnings Beats Digest newsletter. I publish that Mondays, Wednesdays, and Friday mornings. And all you need to do is put in your name and email address, hit that subscribe button, and you'll be subscribed. No credit card required, and you can unsubscribe at any time. We'd love to have you. You can see also on our website the performance of our portfolios. These are all individual stock portfolios. Every one of them are made up of 10 equal weighted stocks. So 10 leading stocks in 10 industry groups. And history and the track record speaks for itself. You can see that since the inception on November 19th of 2018, our model portfolio now up 170%, a little over that. And the S&P 500 for comparative purposes, up 27%. So that's quite a bit of outperformance. And the exciting part is this evening, we actually had a model ETF portfolio. It was our inaugural model ETF portfolio. And so we announced 8 different ETFs that we're putting into a portfolio with, once again, the idea of beating the S&P 500. So if you'd like to be able to go back and take a look at our recording, get a little bit more information on what we're doing with the ETFs, just simply click on that Join Today button, and it'll take you over to a page, gives you a little idea of some of the things that we do. We do offer a fully refundable $7 30-day trial. So you sign up for $7, we refund that to you within the first 5 to 10 business days, and then you can enjoy a no-cost 30-day trial and see what you think of the service. We get a lot of very, very positive feedback. I think our results speak for themselves, especially, again, if you go back and take a look at our portfolios. But we do a lot more than just these portfolios. We do a lot of research for our members. I think you'd really enjoy the service. All right, let's keep moving here. So daily market recap. It was an interesting start. Market was actually higher in the morning, but selling took place most of the rest of the day. You can see by the day's end, the Dow Jones Industrial Average had lost 1.44%, the S&P 500 down 1.63%, the NASDAQ 1.65%. Both the mid-cap and small-cap index down a little more than 1% as well. So just not able to get the breakout on the small caps. Mid-caps broke out last week, but did pull back today, back beneath that 2,000 level. We'll see whether or not later in the week we can get through 2,000 again to the upside. The NASDAQ, as far as I can see, looks to me like we're putting in a nice little handle off of a cup. If we can hold on to these moving averages, that's what I'd like to see it do. It could be tough. I've been talking about the seasonality. This is the worst week of starting on the 21st. So starting on Wednesday, that begins the worst week of the year historically. And this time of the calendar month just usually isn't very good. We had a Max Payne webinar last Tuesday, which focuses on options. We always do those for our members 3 days before options expire. So options expire the third Friday of the month. So the Tuesday before the third Friday, we have an event. I was looking at the QQQ. It looked to me like the QQQ, which is the ETF that tracks the NASDAQ 100, could drop as much as 5%. And since our webinar last Tuesday after the close, we're down more than 4%. So we do have the action heading in the direction that we thought it would based on options. And you certainly, as a trader, need to be very, very careful when we're trading right around that options expiration date. All right, moving on to the sectors, you can see utilities, actually the best performer, and that's on a relative basis. Everything was down. We had all 11 sectors down on Monday, but utilities were down less than 1%. So they performed the best. Energy, it seems like energy is down at the bottom, regardless whether we have a good day or a bad day. Energy dropped more than 2%. Technology lost 1.8%. So really, again, all 11 sectors down, just not a good day in the market. We did see some pockets of strength, and they tended to be in areas that have not performed well since the pandemic began. So airlines had a really strong day today on a relative basis, gaining almost 1%. To the downside, the worst performing industry group was the Dow Jones US Furnishings Index, down more than 3%, but this is a group that had been doing very well and recently had broken out again. So this sell-off took us down close to that 20-day moving average. We'll see whether or not that holds as we move forward. All right, the 10-year Treasury yield. We did see a slight move to the upside. We were up about 2 basis points to 0.76%. I see still an uptrend here. I'm liking it. I got higher highs and also higher lows. We're trending above our moving averages. Both of our moving averages are moving higher with the 20-day above the 50. We got the PPO in positive territory. So things look pretty good here. We do have a couple of housing reports coming out on Tuesday morning, which is probably good for the market because housing reports have generally been coming in ahead of expectations. But we've got September housing starts coming out in the morning. The expectation there is for 1,451,000 units. August was 1,416,000 units. So we're looking for improvement. And then September building permits out at the same time. The estimate there is 1.5 million units. That's the estimate. August was 1,470,000 units. So again, looking for improvement. I suspect as we keep getting these housing reports in that we'll probably do or that we'll probably see a report that's better than anticipated. But the question is, what does the market do? And do we get the breakout on the 10-year Treasury yield above 0.8%? If we can keep moving higher on the 10-year Treasury yield, I think that will keep us from falling too far on the S&P 500. However, if we see a bad housing report tomorrow and that 10-year Treasury yield starts to roll back over, that could be the recipe for some additional selling in the U.S. equity market. All right, let's move on to talking technically. And I just wanted to pull up one chart. And what I've done here is I've put these black dotted vertical lines in here to mark 5-day moving averages of the equity only put call ratio when we get below 0.55. So when we touch that level or move below, that is where you see these black dotted lines coming in. And if you take a look at where the S&P 500 is, you can see rarely have we had big moves to the upside after these have printed. I would say maybe a little bit here, although we did have a quick pullback in March of 2019. Maybe November didn't really pan out that well, but here we had a drop. I mean, you can see a lot of times this lines up with some pretty significant drops in the S&P 500. And the whole point here is that when the options world gets overly optimistic and too bullish, it's all these sentiment indicators are simply telling us that, when they get too bullish, that we should expect the opposite to happen. So when you do get the CPCE dropping down below 0.55, it's telling us that on a relative basis, when we go back over the last 5 years, these are areas where the market's getting complacent, getting way too bullish, and sometimes we just need a short-term pause. Now, some of these you can see back in February, of course, we had the pandemic, but for the most part, we're looking at just pullbacks, not huge sell-offs. And so I just think the market could consolidate. Maybe we get a little bit of selling because of that historical bearishness that we tend to see. That's about all I would be looking for, I think, at this point. All right, let's move on to short squeeze. All right, so I have a number of stocks for you here, and we keep a short squeeze chart list for our members at Earnings Beats. And if you're also a StockCharts member and you're an Earnings Beats member, you can download the chart list into your StockCharts account as long as you're at least an extra member. So you need to be either an extra or a pro member. And the idea here is we essentially do all the homework for you. We do the research, and then we just simply allow you to come to our website, click a link, and drop our homework right into your account. It's a great way to just to stay up to date on everything in the market, because as a trader, you really need to be nimble. You need to know, you need the knowledge to trade profitably in the market. And I think the short squeeze chart list is one chart list that will help you do that. So I look at our chart list. There's 72 companies right now on our short squeeze chart list. I would say of those 72 companies, that probably 15 are potential trading candidates on the long side. And I'm going to go over a few of those with you. Now, what I look for is, most of these companies being shorted are being shorted for a reason. They're in downtrends and you want to stay away. But once they start moving higher and they become relative strength leaders among their peers, and you see the volume start coming in, some of these short squeeze candidates can really move quickly to the upside. So I'm going to start off here with National Beverage Corp, which is ticker symbol FIZZ, F-I-Z-Z. I see a move up, looks like maybe a little cup handle forming. A breakout above 85 would be very bullish. Look at the relative strength. This is one of the best stocks now in the soft drink area. So if we could get that breakout above 85, get a little bit of volume come in, I believe the short squeeze could continue here. Next up is Bed Bath & Beyond. Bed Bath & Beyond, since gapping up here with this huge volume, 80 million shares, has continued pushing higher. Look at the stock relative to specialty retail. It is crushing the specialty retail peers. Specialty retail has been going up relative to the S&P 500 for the past year. So not only do you have a stock that's performing well against its peer group, but its peer group is strong. So you got one of the strongest stocks in the market right here. Look at the volume coming in. I think shorts are being backed into a corner here, and Bed Bath & Beyond, I believe still has room to the upside. Next up is SunPower, SPWR. This is in the renewable energy space. Check out this move. Look at the volume coming in. Look at the relative strength versus its renewable energy peers. It's got it all going, and that volume right there tells me that shorts are being backed into a corner for sure. Next up is Stitch Fix. Stitch Fix, look at the relative strength down here, getting close to a 52-week high versus clothing and accessories. Clothing and accessories has moved to about a 7-month relative high to the S&P 500. So this is a group that had struggled really badly back in the first 3 months of the year into the start of the pandemic, and didn't really get going until middle of May. But since then, the group has started to show relative strength. Like I said, just recently printing about a 7-month relative high, and Stitch Fix has been one of the better stocks in this group. Volume's been picking up as it's been making breakouts. This is a stock that I suspect will go higher. Cheesecake Factory, CAKE. Now this one trying to make that breakout above 3250. Look at the volume picking up. On a relative basis, not exactly a great looking candidate, but an improving one. So cheesecake here relative to the restaurants, very close to moving to about a 6-month relative high. I'm not quite there yet, but something to watch for. Restaurants are starting to gain strength again on a relative basis, and cheesecake showing some strength on a relative basis as well. Let's get that closing breakout above 32.50. Next up, this is Big Five BGFV, Big Five Sporting Goods. Once again, in that relative, or excuse me, in the specialty retail space. And look at the stock relative to the specialty retailers. 52-week high. And once again, that group has been very strong. So you got a really strong stock in a strong group. The only thing missing here is don't see a whole lot of volume. We did back in July and August, but recently, not that much as we've broken out. Maybe a little bit of an uptick. But I believe this one's got room to the upside. I'd like to see some more volume coming in. The last one I'm going to go over here is Buckle, BKE. If you take a look at Buckle, here you've been trending higher. Looking at it on a relative strength basis, this is relative to the apparel retail group. Going straight up, really strong. Like to see a little bit more strength in apparel retail, but Buckle has definitely been one of the leaders. Volume has picked up on these moves to the upside. I think watch this breakout level here around 22 bucks, coming back down to test that 20-day and price support. That's where I would expect BKE to start moving again. So those are just maybe 6-7 short squeeze candidates that you should keep an eye on. But we have this list updated once a month for our members, and it has produced some really sizable winners. Let me just give you one last stock that was on this list. Jinko Solar. This is what can happen. Now, this is maybe a little bit of a stretch. Most of them don't do this. But Jinko Solar, I believe, I stopped counting, but I think it has gone up. It's posted a higher intraday low for close to 30 straight days now. I've never seen that before in a stock, but look at the volume coming in. Talk about a short squeeze. This thing has been straight up and seems to be showing no signs of letting up, not at this point. All right, let's move on to chart lists. So I thought what we would do today with the chart list is we have a strong future earnings chart list. So we have multiple chart lists that our members can download into their StockCharts account. Again, if they're at least an extra member or above, extra or pro. And so we do all the research, put these chart lists together, and then allow our members to just drop them into their account to help in their trading. So one of the lists that we have is what we call our strong earnings chart list. So in order to get on that chart list, you've got to have, our company has to beat its top line estimate and its bottom line estimate in its latest quarterly earnings report. And when I say top line and bottom line, of course, I mean revenues, top line, and then earnings per share, bottom line. So if company beats Wall Street estimates on both of those, then I look at the chart, make sure that they're liquid and that they, show, bullish technical signs, and then they get added to the strong earnings chart list. Then with the strong future earnings chart list, what I do is I take a look at companies that are performing very well technically, and then I go back and compare to see which ones that I've looked at are not on the strong earnings chart list. And those that are not on the strong earnings chart list go on the strong future earnings chart list. So these are just companies that are showing really strong technicals. And I expect based on that they are going to report some strong numbers. So having said all that, now I've got the strong future earnings chart list, and I've got it sorted using this summary form. And you can sort based on any number of periods, intraday, end of day, 1 week, 1 month, 3 months, 6 month, year to date, 1 year, so far and so forth. So here with just intraday or just looking at Monday's action, I can see companies that have been very strong. Look at the scooter scores here. See how they're many of them are up in the 90s, a couple of them even 99. Cardiff Oncology, CRDF, 99.9. It was down 9% today, but it's been one of the best stocks. Is this presenting an opportunity? Well, we can go through and look at a couple of these charts. Getting a 20-day test, that's nice. I wouldn't be surprised to see a bounce on Tuesday. Stock was up at $18, and now you're getting a pullback to 13.5 after just a week or so. This is a stock that definitely it's not for everyone. It's very volatile, but if you're if you're willing to take on risk as a trader, I think Cardiff Oncology is one to maybe think about. But let's just go back now. Surface Oncology. See what's going on here. Another one that had broken out, pulling back. I think anything down close to that $8 level or just below looks very interesting. Stock was up at about 1030 just 3 or 4 trading days ago. Now it's at 841, and a little bit more of a pullback could get us a 20-day test. So Surf, I think, would look good there. Kirkland's, K-I-R-K. I think we got a cup. So you got a nice uptrend, a cup. I think we're going to pull back. I'd watch that 20-day moving average. I would be surprised if we close below it. I think we'll bounce off of that. So that could present an opportunity with a little bit more selling. USX. This is US Express Enterprises. Another cup. This one actually came back down below the moving averages, though. So I believe we might be setting up for sideways consolidation, which means we could come back down to this previous low around 750. But if we did, I think that would set up a nice reward to risk buy. Let's see. How about we take a look at, let's look at one or two more here. And I'm going to go down. Here's one 99.4. Let's look at Overstock. Well, Overstock just made a huge run, pulled back, I think set a pretty key support level at 60, bounced back up, got up close to 90. I think we're in this trading range for now, though. I don't know that we go all the way back down to 60, but I wouldn't be surprised if we did. You've got some gap support there. Look at the heavy volume gap up. Let's put the inspect on this, see what that number is. $60.74. So when we came back down here, we got down to a low of 61. So it got very close, got within a quarter. After going all the way up to 130, came all the way back down within a quarter of gap support. And then rallied, now it's pulling back. Anything down in the lower 60s would really start to get my attention. All right, let's move on. One more that was in the 90s. How about Tupperware? Tupperware was actually trying to break out on Monday, got up over $24, $24.67, then finished at $21.05. That kind of reversal is never a good sign. When you get that intraday breakout, can't hold it and then reverse and close down near the low. I think short term, we're probably looking at 20, maybe just below 20. 50-day moving average coming in at 1996. I would be watching for a reversal somewhere around that level. All right, let's move on to earnings spotlight. So one company that came out that I was watching closely, and I suspected they were going to have a really good report, was Cadence Design System. You can see the AD line, accumulation distribution, has been moving up. CDNS here, nice little cup, handle, brewing. We'll have to wait and see if we can get a breakout. After hours action was up just slightly, fractionally. But CDNS, easy beat. Top line, 667 million. The estimate was for 642.29 million. So an easy beat on the top line. Bottom line came in at 70 cents. The market was expecting 61 cents. But the stock was only up, like I said, about 0.75%. So it's still going to have some work to do to get this breakout above about 117, 118. But if we get it, you really got a nice pattern here. That would measure up probably another $20 or so. So a breakout above, say, 117, I'd be looking for about a 137 measurement. Next up, IBM. IBM came up short on revenues, not by a lot, but a little bit. They did beat on their bottom line barely. Stock was down 3% after hours. Now I want you to look at this relative strength on IBM. We had the big gap up with heavy volume about 2 weeks ago, a week and a half ago. Since then, we've gone down and set a new 52-week relative low versus its peers. That is not good. So I'm just not a fan of IBM. Look at the AD line going down, stock gapping down 3%, or looks to gap down maybe about 3% based on after hours action. I don't know. We'll have to see how things progress, but it doesn't look good to me. Another earnings report out, Hexcel Corp. This is HXL. Look at what's been going on. We got the high in June. We're not even near the June high. AD line, pretty weak, down close, fairly close to a 52-week low. But look at the relative strength. And this is relative to aerospace. There aren't many areas worse than aerospace. Look at aerospace relative to the S&P 500. Down near 52-week low, it's been trending lower. And Hexcel has been trending lower versus that group for the past 3 months. They came out with their earnings. Huge miss on the revenues. 287 million in revenues. Market was expecting 359 million. And then bottom line, the market was expecting a 7-cent profit. They had a loss of 29 cents. Stock down almost 8% after hours. This is why you don't want to be involved with companies that are not trading well going into earnings. Wall Street's telling you. They've met with management. They know what's going on, and they don't want to buy it. So we shouldn't want to buy it either. That's just common sense. One last stock. This one actually was getting a pretty good reaction after hours. This is CCK, which is Crown Holdings. We had broken out, so we were already at a 52-week high. AD line's been pretty strong as well. Relative to its peers, so-so. I mean, maybe a little bit of strength back a couple months ago, then a pullback. Now we're starting to strengthen again. But mostly I would say just sideways action, not bad. But the stock is trading up 5.6% after hours. So it looks like another new high in store on Tuesday for Crown Holdings. All right, let's move on to the 3 you must see, and then we'll wrap this show up. First up, I wanted to show you Western Digital, WDC. So this is in computer hardware. You can see the big gap down that took place in August on heavy volume. And I'm going to annotate this in case you don't see this. But since gapping down right there, notice we have not been able to close above. And when you get these tails like this, see that shooting star candle, long tail above this resistance area, the gap resistance, but then couldn't finish it off. And then 2 weeks later, back down another 10%. You got to pay attention to these signals. Now, the good news here is, look at the volume that came in on Monday. We actually made a breakout here on Western Digital. Like I said earlier, some of the areas that have been hardest hit actually did better on Monday. It seemed airlines doing well, cruise lines doing well. Here you can see Western Digital on big volume breaking out to its highest close in the last few months. Where does it go from here? Well, I think we'll probably go up to the test, maybe the gap resistance at the top. So maybe we get to 44 on this move. We'll see whether or not we can get through. Overall, I don't like the chart. I just think in the short term, this breakout maybe gives us a chance here. Next up is CAE. Here we're trying to break out above this double top from August. Still got a little bit of work to do, but I think if we can get a close above 17, that would be bullish. Volume did start to pick up, and we are holding the rising 20-day moving average. So there are some good signs on this chart, but it has still been a laggard throughout this entire pandemic. So still need some more confirmation on CAE. Last one I wanted to mention is just Wells Fargo. It's been a horrible stock. It's in the banking area, and it is back down near that May low. So as bad as the banks have been, and they've been really bad on a relative basis, Wells Fargo has been one of the worst banks and continues to be just that. Stay away until we start to see strength. All right, that's it for me for this episode of Trading Places Live. Wishing everybody a great Tuesday, and I'll be back on Wednesday at Earnings Beats for the next Trading Places Live. Happy trading, everybody.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.